Welcome to Takeaways. My name is Jordan Brooks. I'm Senior Market Analyst with ALN Apartment Data, and this is our first episode of the new year, so Happy New Year. Hopefully everyone had a great holiday season. Our newsletter this month was mostly about expectations for 2025. Just sort of as an aside, our blog content, some of it's already up, some of it will be going up in the near future. We're going to have articles looking back with some depth at 2024 performance. But the newsletter this month was looking forward for kind of what to expect broadly in 2025. One item that I didn't have space for in the newsletter itself was talking about consumer confidence. And there's a couple of different sources for consumer confidence or consumer sentiment metrics. Anytime you're doing sentiment metrics, it can get a little bit dicey in terms of how you measure these things. But one of the big metrics that is generally put out is by the conference board. And I wanted to just briefly talk about this. Consumer confidence has been bouncing around in recent months. In November of 2024, it reached its highest level in more than a year. And then it came back down a little bit in December. But a couple of sort of subsets of that number below the headline number that caught my eye. Basically, the two cohorts with the highest confidence were the under 35 age demographic and those making at least $100,000 per year. So obviously those two cohorts are particularly relevant to multifamily. The under 35 is sort of the prime renting demographic. So to see that age demographic have a good confidence reading bodes well for multifamily demand this year. And then also those making over $100,000. This is something that could be a positive indication for particularly the new supply that we still have coming into the market this year, then that sort of Class A, even Class B space, and there being demand there waiting for those units. And we know that the single family side is still facing headwinds that make that segment of housing unattainable, even for those making over $100,000 in some markets. So both of those things, again, while the overall consumer confidence metric has been bouncing around some, those two particular kind of subsets of the population look good for multifamily demand in 2025. And then I mentioned supply there briefly. I wanted to talk a little bit more about that as well. Of course, new supply was sort of the headline metric of 2024. Multifamily performance, about 600,000 conventional units delivered across the country, is a massive year. The most new supply going back, to the mid 80s, really. So a huge number in 2024. Of course, there was a lot made of the drawdown in starts and permitting for new multifamily projects that started to get reported pretty widely last year. But again, we have to keep in mind that the average construction duration is nearly 2 years nationally. And so when we're talking about permitting and starts in 2024, we're really talking about new supply that will be hitting the market in 26 and 27s. For 2025, ALN expects another active year, not quite to the same extent as in 2024 probably, but there is still a little bit of movement in that number, mostly because we look at expected lease starts and then we sort of layer on how long projects are taking to build. And if that expected lease start is well outside of that range, we generally make adjustments to our own supply forecast. ALN is expecting about 465,000 new units in 2025. Again, that's compared to about 600,000 new units in 2024. So a pretty significant reduction. However, 465,000 is still a very large number relative to sort of the historical range for multifamily. And there were, at the end of 2024, a little over 800,000 units under construction. These are projects that have already broken ground. Again, that 465,000 unit expected number for this year is a subset of that 800,000. But if there are changes in construction duration, maybe these projects start delivering more quickly than it looked at the start of the year. We could see as many as about 615,000 new units delivered this year. So again, there's still a little bit of uncertainty in how much of a reduction we're going to see relative to 2024. It's not likely that we're going to see new supply equal or exceed 2024. But I just wanted to mention that it is within the realm of possibility that we could see that. However, again, expectations are for almost 150,000 fewer units than we saw last year's. New supply will continue to be a major driver of multifamily performance this year. It may prevent average occupancy from beginning its turnaround. That may not occur until 2026. But the demand picture looks good, and at least some reduction in new supply should help the other metrics like lease concessions, rate of growth, etc. So with that, I wanted to just mention a couple of events that I have upcoming, if these are areas that are relevant to you. The Mid-Florida Summit on February 20th is in Lakeland, Florida. That's in the Tampa area. I'll be speaking there. The National Association of Home Builders International Builder Show in Las Vegas is happening next month as well. I'll be speaking there on February 27th. And then the St. Louis Apartment Association's State of the Industry is on March 4th, obviously in St. Louis, and I'll be speaking there as well. So be aware of those if any of those are relevant to you. And then, of course, our blog, we're continuing to put out a couple more pieces about 2024 performance, alndata.com/blog. And check us out on your social media platform of choice. Whatever your preferred platform is, search for ALN Apartment Data, and you will find us there. See you next month.